Again, this is just based on supply constriction, supply shock, and thinking Bitcoin has already topped based on demand shock, based on the business cycle, not likely. The US economy and broader global economy still in contraction. I showed you a few key metrics over a month ago. The video was called "This #1 Bitcoin chart predicts what's next for crypto." Highly recommend you refresh yourself on these charts. We went over the Puell multiple. We also went over Bitcoin's MVRV Z-score. I know this sounds confusing, but these charts are so valuable when determining how far along the Bitcoin cycle is, or are we close to topping with Bitcoin. I'd also add the Bitcoin dominance chart as a tool in your arsenal to determine when altcoin season is, or is now a good time or a bad time to get into altcoins. And this is the fourth chart. Honestly, these 4 charts, in my opinion, if you understand these 4 charts, you will have such an edge in crypto investing. You will make so much more money in crypto investing, in my opinion. And let's review together these charts. Let's come back to these metrics every 3 to 4 weeks and keep refreshing, reviewing where we are in the cycle. That's why you subscribe to Altcoin Daily, because we give you an edge in crypto investing. Seriously, just in the last 28 days, we've gained over 25,000 subscribers. It's free, it costs nothing. Click subscribe for an edge. But just to play you one more clip and share with you one more chart, history seems to be not repeating, but rhyming, as Bitcoin is perfectly on track with the 2016-2017 cycle, meaning buying Bitcoin today is like buying Bitcoin right here at the start of 2017. So everybody thinks Bitcoin at 94,000 or Bitcoin when it topped at 108,000. That's so big. Maybe the cycle is over. When in doubt, zoom out, understand the perspective. Watch this clip, then I'll react.
2017-16 was a near identical setup. So the market has been following the pattern. But outside of that, Trump got elected. Everyone went, oh shit, tariffs. They're inflationary. The dollar screamed higher. Rates went higher. And then what happened was Trump came in and said, we need to get a lower dollar. Scott Bessent's already talked about it. The other guys coming in as the Economic Council guys already talked about the dollar being a problem. So I think they're using the dollar as the stick and will then offer it as the carrot to the Chinese, the Canadians, the Europeans, and everybody else, which is, if you agree a trade deal with us, we will help lower the dollar. The dollar is a function of liquidity, which is why rates are so bad as well. There's actually not enough liquidity in the system. And I think that's sort of somewhat purposeful overall. But if we go back to 2017 and we had that setup of the dollar turning over and then rates actually came down for the rest of the year. The other thing, the Fed were raising rates all of 2017 and crypto went up.
Yeah.
USM2 went down. So all of the things you would be looking for, they were all in reverse. So what really was happening in 2017 was China had been beaten up by the strong dollar in 2015, 2016, and their economy was super slow. China increased the balance sheet and the Fed lowered the dollar. The Europeans did some QE and the UK did some QE. We got a near identical setup. The market is over extrapolating tariffs and fears. Whatever rates do is irrelevant. It's what global money supply does. Not global money supply, global liquidity does going forwards.